Every time you order an Uber, the app takes 25% of what you pay. When your solar panels generate excess energy, the power company buys it back at their rates, not yours. Your smart home devices collect valuable data that Amazon and Google monetize, not you. We're surrounded by machines that create trillions of dollars of value, but all that value, it all goes back to the parent companies, not to you. So corporations are hoarding all the profits. But what if you owned part of this machine economy instead? What if communities, not corporations, controlled and profited from our automated future? And that's where Peaq comes in. They're building a specialized blockchain infrastructure to enable a community-owned machine economy. And by the end of this video, you'll understand exactly why Peaq has so much product market fit, why not enough people are talking about it. Plus, you'll discover the cool real-world dApps called DePINs that you can try on their blockchain and even earn free tokens. So stick around till the end. But before we get into what is Peaq, first, what is DePIN? DePIN stands for Decentralized Physical Infrastructure Networks. Okay, but what does that actually mean? Think about how infrastructure works today, like ride-sharing apps, mobile networks, delivery services, and EV charging stations. Right now, they're all controlled by big corporations like Uber and Grab, AT&T and DoorDash, and Tesla or ChargePoint. They own the infrastructure and they get to keep all the profits. Now imagine if instead of just one company owning everything, the entire network was owned and operated by the people that actually use it. And that's what DePIN does. It uses blockchain and token incentives to get people to contribute to real-world infrastructure. DePIN lets users build, own, and earn from real-world infrastructure. And I feel like that's honestly a game changer because it takes power away from the big tech and big industry and it gives it back to the people. And the best part, these networks can grow organically as users share benefits with friends and family first, and that potentially creates more powerful network effects with much lower marketing costs than traditional big tech platforms. So how does Peaq fit into this picture? And more importantly, what is Peaq? I promise we'll get onto that in just a bit. But first I have to tell you how Peaq even got onto my radar. If you're a regular viewer, great. You will know that I'm bullish on Infinex and Solana. And if you don't, well, you now know I'm bullish on Infinex and Solana. I don't just chase hype when it comes to crypto. I hunt for projects with solid fundamentals and real-world utility. I've been following someone called Simon from Moonrock Capital. He shares a similar set of convictions about Solana and Infinex, and now Simon has increasingly been discussing Peaq alongside these projects, which I already believe in. So when someone whose analysis I trust starts highlighting a project consistently, I take notice. And Simon's growing interest in Peaq suggests that there might be something substantial worth putting attention to. And yes, I'm super well aware that Moonrock Capital is a VC firm with investments in Peaq and sizable investments in Peaq. That's exactly part of why this matters. VCs like Moonrock, they have access to information, teams, and insights that we simply don't. They assess projects thoroughly and take on early risks based on deep analysis. And what's telling is out of everything Simon posts about, Peaq consistently gets significant coverage more than anything else. And in my opinion, that's a signal worth paying attention to, and that's how it got on my actual radar. So now let's look at what Peaq is actually building and why it deserves your attention. So what is the Peaq network? Let's start with the basics. It's a layer 1 blockchain. That means it's a complete blockchain system like Ethereum or Solana, but unlike those general purpose blockchains that can do DeFi and transactions and NFTs, Peaq has a very specific focus. It's designed to power something called the machine economy through decentralized physical infrastructure networks, or DePINs for short. Think about Uber once again. When you use Uber, you're using your smartphone to connect with a driver who provides a service. Uber takes a big cut as a middleman, often 25% or more of what you pay. The app, the data, the network, it's all owned by the company. But now imagine a version where there's no central company involved. There of course be some core developers and some sort of team, but instead the riders and the drivers collectively own the app and data and the network. And they set the rules together, and the value generated stays within the community instead of going to the corporation. And that's essentially what Peaq wants to enable, but for all kinds of physical infrastructure, from electric vehicle charging stations to food delivery to mobile networks. Also, there's trust in Peaq. You visit the site, you see it's already trusted by major companies like Bosch, MasterCard, Airbus, Continental, and NTT. So when industry giants are paying attention, it's probably worth paying attention to as well. Let's get into a little bit of history and context. Peaq has attracted and worked with renowned companies since 2017, originally as a permission blockchain for enterprise usage and applications, but around 2020, Peaq underwent a strategic shift, abandoning the permissioned approach in favor of public Web3 infrastructure, which I'm incredibly bullish on. So this pivot reflected the team's growing conviction that permission blockchains were inherently limited and couldn't deliver genuine decentralization. The testnet went live in 2022, and the official launch of mainnet went live in 2024. So, very important, you are still early. Now, as I said, I've been researching this extensively, and I'm still trying to package it in a way where you really get it. And I think the next question is pretty valid. What exactly is Peaq trying to achieve? If you go to their website, it says they're democratizing abundance in the age of automation. What does that mean? Well, I think it's a fancy way of saying they want to make sure that when machines start generating more value in our economy, and it's very, very soon, that value doesn't just go to the 1% that basically own everything, right? Think about it like this. We're heading towards a future where machines, robots, and AI will do more and more work. It's very, very bullish, but also kind of bearish in a sense. It's going to replace a lot of humans. And unlike the traditional Web 2 model, Peaq flips this on its head by creating what they call a community-governed network, where communities build community-owned apps for community-owned machines to create value for communities. And one very important thing that I like is the team is actually doxed. This is normally the case for blockchains, to be perfectly honest. It's not always though. And what I like to see and what you want to see are the founders before you get involved with a new blockchain. I think for a network to do well, you need to look at Jupiter, you need to look at Ethereum, you need to look at Solana. The team, they're doxed, and that helps to ensure trust on the project, and then it does well. By the way, all those tokens, Jupe, Sol, ETH, they're all down quite a bit over the last few months, but in my opinion, it's a correction in the bull cycle. That's just my opinion though. And so after a little bit of digging, when I visit the website of the company developing Peaq as an open network, EOT Labs, Economy of Things, I see a lineup of reputable professionals from the Web 2 space who have successfully transitioned into the Web 3 ecosystem. So what makes Peaq different from other blockchains? You might be wondering, couldn't I just build all this machine economy stuff on Ethereum or Solana? Well, Peaq is different because it's designed specifically for machines to talk to each other, blah, 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 and then for businesses to work together. Usually when blockchain networks just work on solving one problem or just progressing on being better in one niche, that's when you generally take over the world. I believe it's kind of the truth for humans as well. If you're just really good at one thing, you'll be really, really good at it as opposed to being a little bit good at everything. Let's get into the depths of what Peaq is really doing that is really unique. The first key feature worth understanding is how Peaq handles machine identity. The coolest thing about Peaq is something called Peaq ID. This is basically a digital identity system for machines. Why do I think it's pretty cool? Well, your phone has a unique ID, your car has a vehicle identification number, and it's connected to the car's computers. But these IDs only work in their own system. Like a Honda is not going to speak to a Tesla, and your car's ID doesn't mean anything to your smartphone. Peaq ID gives machines what's called a self-sovereign machine identity, or SSMI. Consider this like a universal digital passport that lets machines identify themselves to other machines. They also work across different networks and systems, and it doesn't depend on any central company to verify it. We'll come back to this in a bit, but what makes this truly important is it solves two major problems with today's machine identification. First, current systems are centrally controlled by corporations or governments that limit what machines can do. With Peaq ID, machines aren't restricted by Apple, Google, or Amazon's closed systems. Second, traditional IDs only identify a machine and its specifications within a company's database. In contrast, this system, Peaq ID, gives the machines so much more that they can do. With Peaq ID, machines can move and interact with other machines with minimal friction in time, risk, and cost. I'll give you an example. Let's say an autonomous delivery drone can use Peaq ID to verify itself a charging station, coordinates safe flight paths with other drones, and confirms a recipient's identity before dropping off a package without requiring any human middlemen. And so a very important question arises here. Would you rather live in a world where these machines are centrally controlled by a corporation, or one where you have you and your neighbors having decentralized control and ownership over these machines? I'm very well aware that this sounds too good to be true, and if you asked me 10 years ago, I wouldn't have known anything about it at all. And if you asked me when I first got into crypto, I would have said that big tech already owns your data and it's game over. It's just how it's going to be. But now I'm seeing that there is a path towards this distributed ownership. This machine economy is an economy where machines can provide services and make money on their own. Already touched on that, but just a bit of a reminder. It's a new concept. Here's an example. Let's consider smart electricity grids. Currently, when you generate excess solar power, you sell it back to a centralized utility company at rates they determined. You have no control over pricing, and your data about energy usage patterns becomes their asset. Data is the new oil. So with the Peaq-based decentralized energy market, households could directly trade energy with neighbors, negotiate their own rates based on real-time supply and demand, and maintain ownership of their usage data. So this shifts control from monopolies to a community-owned network where producers and consumers collectively set the rules. The next thing is machine-to-machine interactions. Most blockchains were built for humans to send tokens to other humans. Peaq was built from the ground up to power interactions between humans, machines, and everything in between, with machine-to-machine business as a core part of that equation. Imagine your electric car pulling in to a charging station. With Peaq, your car can identify itself to the charging station. It can pay automatically without you doing anything. It can even negotiate the best price for electricity. You don't have to open any apps. No credit cards to swipe. The machine handles everything peer-to-peer. Thus far, I've only spoken about the vision. But now let's ask the question, what's actually running on Peaq today? Let's look at some real applications with active users. Now in crypto, we've seen too many white papers and roadmaps with not enough working products that actually delivered. The term is called vaporware, and from my 8 years in crypto, I've seen heaps of it. So here are some dApps with real users and real use cases live on Peaq right now. Number one is Silencio, noise pollution mapping. This is one of the most exciting dApps on Peaq. It has over 900,000 users across 180 countries. How it works is it uses your smartphone microphone to collect noise data in your area, creating detailed noise pollution maps that can help with city planning and finding quiet spaces. You earn tokens for contributing data, and it has already outperformed traditional centralized noise mapping efforts. The TLDR is, you want to buy a house? Well, how much noise is there? You want to rent a house? How much noise is there? This is vital. Personally, I like quiet spaces. Ex Machina. This is tokenized robots and a DAO. This DAO created the world's first tokenized automatic robo cafe. It recently went live at Token 2049. What makes Ex Machina stand out is its DAO structure, where the community collectively benefits from automated robots. It works through machine pools on Peaq's platform, where you provide liquidity and receive tokens representing your share of the robot's revenue. As a DAO token holder, you also get voting rights on new robotic ventures. Their goal is addressing a major challenge of our time: automation taking jobs. Instead of just letting corporations profit, Ex Machina lets everyone have a stake. Next, we've got FarmScent, smart agriculture. This DePIN has already onboarded 160,000 farmers across Asia and South America. It combines smart agriculture tech with a peer-to-peer farm produce marketplace. And then in the future, letting farmers share data and sell directly to consumers without the middleman. For now, it's operating as a F2B marketplace, also known as farmers to business. When we talk about the infrastructure systems, it's important to consider the food delivery network, because this is massive. Now Bistro, a Dutch food delivery platform, has joined the Peaq ecosystem. It brings over 100,000 existing users, and unlike traditional delivery services like Uber Eats or Deliveroo, they charge the restaurants up to 30% in fees. Bistro charges only 5% and gives power back to restaurants and customers. They've seen 200% growth since July 2023, and they're now expanding from the Netherlands into Belgium. Also, I'm sure you've noticed that video streaming and video conferencing, this is a major market, because now not everyone works from an office. They work from home some or even all the time. So the video streaming market is expected to grow enormously, potentially reaching 2.5 trillion by 2032. D-Telecom, unlike traditional services, they've decentralized with community members running the system nodes instead of just a single company controlling everything. It offers services similar to Zoom, streaming platforms for Web3, a voice chat for gaming, and as part of their move to Peaq, they'll also be using Peaq's development tools and ID system. It is live right now, and you can already run the nodes on the dApp. There's also Map Metrics, which is drive to earn navigation. Having onboarded 60,000 users already, this dApp rewards people for collecting navigation data as they drive. Think of it like a decentralized Google Maps where you actually get paid for the data you contribute instead of Google keeping all the value. This is vitally important because Google Maps does not update that often. And sometimes you're on a road and it says the speed limit is 70. In actual fact, it's been reduced down to 60. If you get a speeding ticket, well, you've just lost $200. Now let's talk about something that's really, really cool, and that's machine DeFi. And this is unique to Peaq. My forte is basically all in DeFi, and I think this concept is pretty damn cool. So machine DeFi is basically decentralized finance for machines, vehicles, robots, and devices. Think of traditional banks and financial institutions, but run by communities instead of corporations. Having just launched last quarter, some examples of machine DeFi on Peaq will include machine yield farming. You can lend out resources from your machines like computing power, storage, or even physical capabilities to dApps and protocols, earning token rewards in return. Also decentralized energy markets, as we've spoken about, regarding solar panels and your battery automatically buying and selling energy on the market without you having to do anything, just buying and selling when the time happens to be the best time for profit. This also contributes to a greener world. Consider Combinder as an example. This is currently in beta on Peaq, but what it does is truly amazing. You can monetize your energy resources while reducing carbon emissions. They also claim that you can trade the energy at your home using a peer-to-peer system. So what is the end goal here? Peaq is building toward a future where machines autonomously generate economic value, and regular people can own shares of this machine-driven economy. This represents a paradigm shift in ownership. Instead of big corporations owning all the robots, autonomous vehicles, and smart infrastructure, communities can co-own and profit from this automated infrastructure. Now let's talk about something you absolutely need to know about if you're thinking about getting involved with Peaq, and that is the tokenomics. As I mentioned, last year, Peaq recently went live on mainnet, and their Peaq token is now listed on 17 exchanges, and more are coming soon. So what exactly does the Peaq token do? The token drives the entire Peaq ecosystem. It has several crucial functions. All transaction fees on the Peaq network are paid using the Peaq token. That means anytime a machine does business with another machine, or anytime someone interacts with a DePIN on Peaq, they're using this token. Second, you can stake your Peaq tokens to help secure the network and earn rewards in return. This system runs through what's called a delegated proof of stake system, where you can either run your own validator node or support somebody else's. Running a validator requires a whole lot of tokens, so it's not going to be worthwhile for most of us. Thirdly, Peaq holders will soon be able to vote on the future direction of the network through on-chain governance. And this is huge because it means the community actually gets to decide how the network evolves. For the actual tokenomics specifically, I do suggest doing your own research, but here's a summary. The Peaq token launched with a total genesis supply of 4.2 billion tokens, and it follows a disinflationary model, starting at 3.5% annual inflation, and that decreases by 10% each year until stabilizing at 1%. Their thesis is that the tokenomic design balances ecosystem growth while minimizing token holder dilution. At launch, less than 9% of the total supply was unlocked. By month 12, only around 34% will be in circulation, and it takes around 24 months to 2 years to reach roughly 58% unlocked. This measured release schedule could help prevent sudden token dumps and promote price stability. It is important to know that even locked tokens can be staked to earn rewards, with staking rewards being immediately unlocked upon receipt. Looking at the allocation structure, Peaq distributed tokens across 5 categories: investors 34%, community 21%, core contributors 20%, network security 5%, and ecosystem and treasury 20%. The initial community airdrop was just 2%. Notably, investors and core contributors hold a combined 54% of the total allocation, with 6 to 9 month lockups, followed by a linear unlock over 18 to 36 months. Now, I won't lie to you, tokenomics are extremely hard to get right. No one has perfect tokenomics, no one. What we have seen recently, with some successful launches potentially, is basically 30 to 40% of the supply being available on token generation event, and that helps facilitate proper price discovery. So Peaq's approach, unlocking only 9% at launch, with investors holding approximately 25% of the initially unlocked supply, that suggests a low float and high fully diluted valuation, a high FDV. This structure, with its limited community allocation, might raise questions about Peaq's commitment to decentralization and true market-driven price discovery. Only time will tell, and that's ultimately for you to decide. If you want to buy some Peaq, they can only be bought on centralized exchanges at present. A link will be below. You can buy them from like Bybit, Crypto.com, etc. And for storing your tokens outside of an exchange, you've got a couple of options like MetaMask, Ledger hardware wallets, and even multi-sig solutions like Safe Wallet. Now, beyond technology, Peaq has a long-term strategy for the community to achieve growth. Peaq is actively building an ecosystem through grants and community programs. They have a dedicated grant program. This offers early stage funding to DePIN builders. The program is run by the Peaq Foundation and backed by some serious Web3 investors like Cypher Capital UAE, Hashkey Capital, and Fundamental Labs. What's cool is soon the community will be able to vote on who gets these grants. Peaq calls their community members Peaqanauts, and they've built a pretty impressive community already. They have over 300,000 people following them on X and over 160,000 people in Discord. They also have an ambassador program. Just letting you know, I am not an ambassador. I'm just giving you all the data. They've got them categorized into technical ambassadors, community ambassadors, ecosystem ambassadors, and communications ambassadors. What you need to do is fill out the form, link is below, and the ambassadors are picked once every 3 months from a pool of contributors, and the contributors are accepted every month. The ambassador program has 2 roles, ambassadors and senior ambassadors. Now, the ambassador program does offer real benefits for participants, and I haven't seen this with any other blockchain. It could exist, I just haven't seen it. First, you get impact, you're actually shaping Peaq. Second, you earn, rewards come in stablecoins and Peaq tokens. Third, you learn, they provide educational opportunities for growth. Now let's talk about getting some tokens. So what I really like is this campaign which is just launched. It's called the Get Real campaign. It's a 12-month long campaign designed to actually reward you for engaging with the Peaq ecosystem, or better yet, what they call the Peaqosystem. The campaign kicked off with a successful preseason on Galaxy back in November 2024. The season 1 ended last month on the Peaq portal. They've structured in a way that you complete quests across 5 different categories: social, learning, DePIN, DeFi, and special. And then you unlock experience points and NFT points that you can redeem for a wide range of rewards, including Peaq tokens. The campaign also incorporates NFT functionality through the Peaqanaut NFTs, and these dynamic customizable NFTs evolve as users complete quests, with the NFT attributes changing based on user participation in the ecosystem. As users complete more tasks, they unlock additional features for the NFTs, including new equipment, locations, and customization options. This is very, very cool, this next part. The NFTs are being built by Koto Studio, and this is a team behind Call of Duty's brand building. So, bit of success there. I would highly suggest you get amongst it. You're learning new dApps and you're getting rewarded for it. Now, during season 1, which was the pilot season, I guess they learned some things. So season 2, according to the team, is getting a makeover. And this means we could expect a little delay. Only DePIN quests were live in season 1 from the categories I mentioned before, but more categories and quests will be live soon in the upcoming seasons. In my opinion, it's not just a good way, but it's literally the best way to get tokens into the hands of people that are committed to using the dApps and trying them out and giving feedback, and then hopefully really liking them. And not just airdrop and engagement farmers or Sybils that just come, extract value, and then abandon it. So to wrap this all up, what is Peaq actually doing? It's addressing a real problem we're facing as we head into a more automated future. Who will own the machines? Is it going to be a handful of tech giants and their shareholders? Or can we create a system where regular people own pieces of this infrastructure and directly benefit from it? Peaq, they're betting on the second option.